Anders.
Hello, Ansam.
What is the impact of geopolitics on marine insurance?
Geopolitics has become a critical factor that influence marine insurance in ways we may not immediately recognize. Geopolitics events such as wars, trade disputes, or sanctions can create economic instability, directly impacting both insurers and policyholders. The world is in a phase of deglobalization, while demand for shipping has never been higher. When countries engage in trade wars or impose tariffs, it affects global markets, increasing the cost of shipping of goods and, of course, insuring the goods and the vessels. In a phase of deglobalization, countries tend to build strategic reserves of critically important resources, which further adds to the demand of seaborne transport services. So, in addition to that, conflict zones and political instability in certain regions significantly elevate risks. Insurance companies face the challenge of covering assets or vessels in volatile regions, particularly war insurers. For example, the conflict in Ukraine increases the risk of vessels engaged in trade in the region and affects global energy prices, the supply chains, and even food security. Insurers need to reassess their premium calculations, leading to increased premiums or, in some cases, the withdrawal of coverage altogether. However, vessels have historically always found a way to trade in conflict zones. As always, when conflict zones arise, geopolitical influence regulatory environments. International sanctions, for example, makes it difficult for insurance companies to do business with certain countries or clients. Sanctions on Iran restricted insurers from covering oil shipments, limiting the global supply and pushing companies to adjust their risk assessments. Lastly, cyber threats, another growing geopolitical risk, cannot be ignored. Many state-sponsored cyber attacks target industries and governments, posing risks to infrastructure, financial institutions, and personal data. Ships' connectivity to shore is improving rapidly, and with that comes the risk of cybercriminals and activists tampering with the operational technology on board. As a result, the demand for cybersecurity insurance has surged, but it is hard to quantify the potential damage from such attacks, leading to complex pricing and insurance conditions. In conclusion, geopolitics shapes the insurance landscapes in several ways, whether through direct impact of wars and conflicts, regulatory shifts due to sanctions. Insurers need to adapt to a world where global dynamics are constantly changing. The challenge is not only to anticipate the changes, but to ensure that insurance continues to provide the protection and stability that the maritime industry rely on in an increasingly unpredictable world.
Many thanks for this, Anders. Bye.
Bye.